You click this because you're tired of missing massive trend reversals and losing trades when the market actually shifts. This is your instant fix. It uses the market structure shift method with a simple tool to instantly show you the exact moment big money is moving. Stick around and I'll not only show you how fast the tool works, but also how to read structure manually starting right now. So the first thing I'm going to do, I'm going to turn on my indicator. We're then going to hide this off. We're then going to go through this now. I'm going to show you how to read the structure and how this automatically plots this for you to read it with ease. So we can identify this as a previous daily high and a daily low. This is going to show me my previous breaks of structure, and this is my internal structure. Now what I'm looking for is a new break to the downside or a higher pullback towards this area. Let's just go forward with this structure. We're looking for potential break. See how the actual internal structure is being plotted as we move forward here. So we're looking for continuation of breaks. We get a new break of structure to downside. At the same time, we've seen the weekly has shifted as well. That means the weekly has shifted bearish with it. This is now going to give me a new area here of potential daily supply. So I can mark this out as my daily supply. So what we're looking for now is a pullback into our daily supply to look for a shift out to enter a trade on the lower time frame, being the 4 hour here. So what we're going to do is just follow price with this movement. Now we start to see a valid pullback, and I'll go through exactly why that's a pullback and the reasoning behind reading the candles later in this video. We'll go through step by step. This is showing me on the tool. This is a valid pullback with a solid line. It's dropped to a 4 hour time frame. So now we're on a 4 hour time frame. What we're looking for is we're going to read the structure again. We're looking for a pullback into our area of supply to be able to take a trade to run back for our week low on a daily. So while we can identify our previous breaks of structure to downside, we're still bearish on a swing structure. On an internal structure, we have shifted bullish and we're currently running to the upside. But we can still see a pullback again, potentially to run these lows, take out the liquidity on this trend line before we see a break to the upside. Let's just go forward with price. What I mean by liquidity, this area here, look, we have a trend line I can mark out. This trend line here is all liquidity, and we could see a run down taking that before we see a run higher. Let's just go forward with price. So we're seeing a run down, taking liquidity. Let's see if we continue further to downside first, or we're going to push up. So we're looking and we get a valid push up. So now you can see the market has shifted that structure very fast. Now we're looking for a pullback continuation towards this area of supply on a daily. So here we see a sweep to downside, filling this imbalance, holding at this strong low. Now we expect to see a break to the upside again. You see we get that pullback. We actually shifted structure. We didn't break out. So at the moment, we haven't got any reason to take a sell with this shift, because the thing is, we want to see a pullback into this area of supply. That's what we're looking for. The market at the moment is making a shift too early. So what we're looking for now is a reason to see a reversal again to go back towards this supply. Now, if we just continue to run to downside, then so be it. We've not taken a trade. We're looking to sell from our daily supply here. Continuing forward, we can see the structure continues bearish. We are running for this week low. Let's see if we're going to continue for this low and it invalidates. Notice how quickly the highs, lows, break structure and balances are plotted. That's the structure companion tool. It automatically marks everything across all time frames. Fully customizable, so you can focus on trading with clarity instead of spending hours drawing lines. The 50 founding members pre-order has now sold out. Spots for the official launch will be extremely limited. Join the waitlist now to guarantee your spot before it's gone. Link is in the description. Okay, so internally we're starting to see a pullback. We could see a pullback into this area to continue higher potentially. Let's just go for price and we shift back bullish. Okay, so now we've made a new break of structure. This is where we can start looking for quick pullbacks, continuation as we run higher again. This is what we wanted to see. So we got a pullback. Didn't really go into anything here. There's no trader go to court. Now we run up towards our supply. So great. Now we can look at what's happening. We've got currently a weekly and a previous daily area of break of structure in the same area here. So now what we're looking for is the market to show as a push into our supply, to show that shift out and to give you that automated fix so you can instantly see where the market's moving. Let's go forward and see if we see this. So we're looking for a final push up and we get it. And look at that. an instant shift back out. That's how quick the market moves when you're in the right location. And to top this off, we have a level here I can mark. That is my last area of imbalance. We could even refine this to a small area here of potential supply. And that's where the market is potentially running up to, this area of imbalance and supply, and we're seeing a shift to downside. Now, this looks much better than we saw down here as a potential shift. We've got a nice solid push to downside. What does that now leave me? Let's get rid of this, and I'll mark it out for you. It now leaves a nice area of supply on a 4-hour time frame. This is that shift in structure that you're looking for. And that's how quickly this tool will automate this for you to see that shift in structure. Now what we're looking for is, as we've seen the shift out, we're quickly going to look to enter this, stop above the high, and then we're looking for the market to first take out the week low of this 4-hour time frame as a potential first target. And then you're looking for the market to run for our daily week low down here. So this is our daily week low in the market. So what we're looking at is a potential start of a pullback. Now you're going to see this form as it does. The indicator is going to plot this for me. It's going to show me a solid line. And don't forget now, continue watching this video because it's going to show you how you can do it step by step. So if you want to learn this for yourself, exactly how to mark this up and read this in rel chart, then you can continue watching to see that. But if you're finding this video very helpful and you're seeing how quickly this automation works, drop me a comment below and just say, automate that structure. That's all I want you to put, is automate that structure. I know you're enjoying this video to this point. So let's go forward with a few candles. And you see how that changed now to solid color. That's confirming my low. And I'll go through that later, why it's confirming the low. So now we're looking for a pullback for an entry. Let's see if we get it or not. Okay, so we're looking for a potential internal structure. So this can act now as a potential area to be run through, swept in the market to fully fill this imbalance into an area of supply. Let's see if that's what we get. So will we get triggered into this trade? So we do. We run this high, taking liquidity, fully filling that area of imbalance. And that's perfect. That's what we're looking for an entry. Now we're looking for the market to run down for this week low. That's going to be a potential area of first target takeoff on this trade. Let's see what happens. So we're running down, we shift internal structure, we hit our first target. That's what we're looking for. And that is how you can quickly identify the shift in structure out of an area of supply, going with that higher time frame bias. And this tool will show you that in a blink of an eye. So let's continue and see if we can run now all the way for that current week low on a daily. Now it's also a week low on a weekly. So the tool's going to hide the daily currently because we don't need to see both the weekly and the daily on there. But if we went to a daily, which I'll show you in a moment, it will be a week low on the daily. So currently the market is starting to show us a continuation of a break of structure. You can see where we see the solid lines continue to downside. Now, if we shift bullish, we're going to see a dashed line straight away. And what that's showing me is the start of a potential reversal in the market. So if we see another bullish move, that's going to go solid. And that could be the start of a new bullish trend in the market. Let's just see what happens. So we failed to actually go bullish again. And we just make a new high. Will we? No, we've swept that high. We've got some internal structure and it shifted back bearish. A new dash line again, just to indicate another shift in structure. And we have another pullback. If we break structure again, you see how we're forming our current trading range. If we break structure to the downside once again, that's going to give me a solid break. And that's going to show me continuation of the trend. And there we have it. And we hit that full target. That is how you can quickly identify a shift in the market by using automation. So I hope you enjoyed this section so far. Now let's go through this again, step by step, and I'll apply this all manually so you can see exact process, why it works, and how you can understand this for yourself. So what I'm going to do is now just turn these all off because I don't need these on the chart now. In fact, I actually had that one turned off already for some reason. So we get rid of those. Also get rid of this. And we'll get rid of these areas as well. And we'll go back to the start. Let's go back to a daily time frame. And I'm going to take this back again to here somewhere. I believe is where we were. Let's get rid of this. and we'll walk through this step by step. Now, this may be the part in the video that you've been waiting for, is to understand why this structure works and how to apply it manually if you so do wish. Now, obviously the tool is going to automate that for you, make everything faster. But of course, this is how you can learn to do this for yourself. So we're going to first look at where is our current range in the market. Now, for a trading range, we look at this in two different ways. So we're looking for the market, let's say on a bullish market like this, we're in a bullish market. When we see this high and we see a pullback, what we're looking for is a close down. Now, what I mean by close down is want to see a candle closing below the previous candle's low. So you see how this candle closed below this candle's low? That's going to validate a high in the market here like this. And when we see a break of structure to the upside, we're looking for the same sequence, okay, down here. Let's say we've seen this close down. That validates this as a potential low in the market. Now, when we're going to the downside as a bearish market, I'll show you that now on this live price chart, and also go through later this whole section where we're just marking it. So what we're looking at first is this low in the market is going to be what we class as a potential weak low in the market. So let me just mark this off as a daily weak low. And we'll put this to the right. Okay, so we have a daily weak low. Now, we need to see a break of structure for that to be formed. And what we get is a break of structure, I believe is this one here. So that's a potential break of structure. So we'll have this as a daily break of structure. So from this point, we're looking where we see the breakout. We wait till we get that close up, and that close up is confirmed here. Now, this is the opposite to what we saw when you're looking for a bullish market. The bearish market, you're looking for a close up candle. The bearish looking for a close down. Where we see this candle closing above this previous candle's high, that confirms this as a valid weak low. Where we see the breakout, again, we look for the same sequence. Where we see the close up, we get right here, and this validates this as a current high in the market. So I'm going to mark this off now as a potential daily strong high. And that's what we're looking for. So put this to the right. So now we have is our, let's just actually change that so it's a bit bigger. So it's in line with what we've got. Okay, so now we've got a strong high and a weak low in the market. Now, I do like to be precise with everything. And just for me, I want to see these the same text size. I know it doesn't need to be, but that's what I want to see. So when I'm marking this out, what I'm going to see here is a potential area of supply in the market. Now, let's just mark it out first. I also have a perfect high here that I could see being run for liquidity into the leftover imbalance here, into this area of supply. Now, the market may well not get to this area, and we could see a continuation to the downside. Now, for it to do that, I would need to see some kind of sweep in the market. And that's kind of what we're seeing right here. We're seeing a sweep in the market at this location. So if the market holds, we've just pushed into this imbalance here, we could see a continuation to downside running for this low again. Let's go forward with price. You can see currently this sweep did hold. So internally, we continue to push lower. And let's move this across. If we get a new break of structure, then we get a new break of structure. This is where everything will shift. So now we're following that structure. This now becomes a new break structure. So let's just grab this line. We'll add this in. This is our new break to downside. So again, we're looking back after the breakout. Let's go closer in. I'll use this arrow just to show you. And we'll zoom into price. So where we see this candle closing down, and we must see a close through for our break of structure, we look back for the last close up. This candle closes above this candle's high. That means this becomes a valid high in the market. So let's just take this back down, and we'll grab this new area here, this high, to bring it down to there. So that is now my valid high, my strong high. It's also my valid area of supply. So what we now have is a nice area of supply we can look for a pullback into to continue with the trend. Just like we had before, we had over here, but we never pulled back high enough for that entry. So we don't have a valid weak low yet. We need to see what? We need to see a close up. So let's go forward with the candles. And there we go, we have a close up. So as soon as we see this candle closed up, then we can mark this off as our valid low. So you can see how long this can take if you're doing this manually, especially across all multiple time frames. That's where that tool automates it quickly for you. The companion tool will show you this instantly on the chart. So now we've got a potential pullback phase. So what we can now do is go down to a lower time frame and start looking for a potential pullback. So I'm going to make sure all these areas are now on the lower time frame. So drop to a 4 hour. So now on the 4 hour time frame, we can start reading our structures. Let's get rid of these arrows and let's zoom into the 4 hour. So our last 4 hour break, we see a close up here in the market. So this becomes a valid break of structure right there on a 4 hour. So mark it out as a 4 hour break of structure. Now we don't have a valid pullback until this one. So this becomes our valid daily and our valid 4 hour low in that moment. And this then becomes a current high here in the market. And I'll just mark it out as well as a 4 hour. Okay, and as a strong high. Mark it to the right. And let's make that 12 there. So for the market to shift structure, and just so you understand, this is not a valid new break of structure here like we see, because we never made a close up. We have to see this pattern of a close up to be a valid breakout, and we don't get that. So this is our valid high in the market. Now for a shift bullish, we've got to see a push through this high. Otherwise, we could continue down and run for this lower again, because this is our current trading range on the 4 hour. Now we do have internal structure here. I'm not going to go through that today. You saw that on the actual tool automatically for you, but there is internal structure here as well. Let's go forward price. I want to show you where we're looking at reading the structure. So we pull back, we're waiting for that breakout. So let's just bring this across. We're waiting to see that break of structure. Right, so that candle there is our valid break of structure. So now we can move this. We're going to create a new break of structure from this high. Right there. Mark that out. And as soon as we see this, we can look back. And this time, we're looking for that close down instead of that close up. To make it easier, I'll mark it off as well. There's the last close down. So what that means, this becomes my current low in the market. So this is now my strong low. So 4 hour SL, strong low. And this is where the market, let's make sure this is to the right. This is where we look for a potential pullback. So we could actually mark out here, potential area of demand, look for a pullback. Now we know in hindsight that doesn't happen. And we're also looking for a valid high. Well, we may have a valid high there. Yeah, it does. So we just had a valid high created. Why? Because this candle here closed below that candle's low, just like we saw here. So we mark it off. This candle just closed down. That creates that valid high. So let's continue with price. We're looking for a push up. We get a push up, a new break of structure straight away, and we close down. So this becomes your next valid high in the market. I'm going to use this as our break of structure. So we've had a new break of structure to the upside. We've now closed back up here as well. That means if we break higher, this low becomes our new strong low. At the moment, we're waiting for that continuation higher. So we wick it, the market pulls back, and we continue forward. We know what happens. We get a new break of structure to the downside. All right, so let me just mark this off. So from this low to here is that break of structure on the 4 hour. So once we see that break of structure, where we see the breakout, where's our last close up? Well, it's here. That's our last candle closed above. We never closed up here. So this becomes our new high. And I'll make sure this is all correct for you. We have to manually change all this now. So this now becomes our, actually this is our strong high. And this was a weak high up here. So I had it marked out wrong. This now becomes our current weak low in the market. Because we closed up. Well, we actually haven't closed up yet. So weak low. So this wouldn't actually be valid yet. We haven't had a close up. Let's just see if we do. We wick through and then we close up on that. So you see where we close up there? So we had a low and then we closed up just there on that candle. This becomes a valid low. So now we're in a bearish market. Okay, so we've got our previous break structure. There's our current high and low. Continue with price. we're making an internal pullback, and then we break structure again. So when we see this breakout, we can mark out a new break structure on the 4 hour. And at this time, we just mark this off first. When you've seen this break, this reversal downside, we're nowhere near that area of daily supply yet. So you don't want to be getting caught into that trap, getting too early. So now we have a valid break of structure. We go back to the other direction where we're looking for the close down, so the close up to find our low and high. So when we look down, this is our last candle that closes down. That becomes our new low. Now it's not a weak low anymore. It's going to be a strong low in the market. So we have a 4 hour strong low. We're looking for that close down to give us a valid high. Again, we don't have it yet. Now we get a close down right there. This would have been a current week high in the market. Now, let me just change that again to a week high. We have a straight pullback on this candle, creating that week high, and then instantly we have a nice break to the upside. There was no chance for an entry there, not in this time frame. So now we have another break of structure. This is showing me a strong move to the upside from this move from down here. So down here was probably would have find a lower time frame reversal as well for a counter trend move higher. So now we're just looking for that closed back down. So that candle just closes below that candle's low. That validates that as a weak high. So when we see that breakout as well, we've got to move this to our low because this is our last close down before the push up. So we have a new valid low in the market. So that's our current range in the market. So what we're looking for is another push up, remember, into our supply. We still haven't done that. Let's see, let's go by candle by candle so I can show you what happens. So this is a breakout and a reverse. So instantly this, okay, would have been a, so scrap this, another break of structure bullish. This low would have come down here in the market where we see the last close down on that candle. And this would have been your current week high, but we close straight back through. So now what we get is a new break of structure again, bearish from this low. That's our shift out of higher time frame supply and structure. This now becomes my strong high instead of my weak high because we made a shift out bearish. We're also going with our higher time frame structure. So if I zoom out now, you'll see there's my higher time frame break of structure, my current high time frame strong high, and my weak low. We got a nice swing move down. We'll pull back into area of supply and a nice drop out showing us that the sellers came into this market. So now when we see this, that's where we can now mark off our area of supply straight away. You've read this step by step and you know that this is now the ideal area we can look to take a trade. So now we can mark out this as our entry, our stop above the high. Now we haven't got a first target until we create a valid low. Okay, now we get this close up. This creates this as a valid low. So now this is my first potential target on this trade. So over to our risk to reward. Great. First target takes risk off the table and then we can let it run for our daily low. That's our first potential target here. So now we just place the trade, watch price, how it comes in. We create this high as an internal structure high. It's also a great area to be run for potential liquidity in the market to fully fill this imbalance. Now, if we close through this imbalance, then we could see a continuation higher. That's something completely different. That is toward inside a 90-day fixed program. Let's go forward with price, looking for that to be run. So we didn't come down. Sometimes we can wick through the strong low, but that can sometimes show you a reversal in structure is coming. So we're looking for a breakthrough. We get the breakthrough this high, taking liquidity into our entry area. So now we can look for the entry. We've held at this area of supply and this imbalance has not been taken out. So now we look for a run for our weak low that says strong low. That's incorrect. We should have changed that. And obviously this is where the tool will automatically change all this for you. So let's go forward. Now we're looking for that continuation down. There, we hit our first target. Fantastic. Let's pause it there. And we'll continue to restructure. Now we're looking to run to our next target, which is that daily low, okay? That swing low there. We're going with the structure, understanding what's happening. Now, until we break this low in the market, we don't have a continuation. So let's just go forward. At the moment, we've got internal structure. I'm not going to go through that again now, but we'll go through the swing structure. Let's watch what happens. Looking for a breakdown. Okay, so there is a breakdown. Perfect. Let's grab this. This also becomes a new week low. And so this is our low for our next break of structure. This is where things can take time to explain. So now we've got a new break of structure. We're looking for that valid high. So I can take this away. Let's get rid of that. There is our valid strong high now, because we see a break to downside. And then we've got the next area of supply that we can look here. Now, there's a few different ways we look at supply zones. I'm not going to go into that today either, because that is more toy inside the 90-day fix. But let's just look what happens here. Sweep price, we see a pullback. Now, we could see a sweep here. Perfect area inside the area of imbalance to sweep the market. That can always hold as well. So if we have a potential sweep formation, we could go up one more time. Let's see what happens. And we do get another push up, taking out those highs. Now we're likely to take out this low. And we've taken out the low. So you can see where the market is just wicked through. Now you want to see a break straight away after taking out these equal highs into this imbalance. Otherwise, we could see a reversal of price. So let's see what happens. And there we go. We get a take straight away of those highs into that imbalance. In case you missed it, let me just show you. We had some equal highs here. We run through those highs on that candle into this imbalance and straight away a push down. Now, if we didn't see that and we closed up, then likely we could run these highs and potentially even shift structure. So now what we've got again is a new break of structure. So there's our new breakout. Mark this off as our BOS. Now when we see this, we're looking for our high. Well, when we see the breakout, there's our last close up. This is our highest point. That's our current strong high in the market. This becomes a new area of supply. Now, straight away, you can see we're potentially entered into this on the next pullback. So we could see a drop from here to continue lower. Let's just see what happens. Okay, so we've pushed up deeper, likely to see a run of the strong high now from here, I would have thought. And then we do. Now, there's a way you can read this, but right now, we just want to show you how the market is moving. So now we're going to have a new break of structure here. Let's add that in. So at this point in time, we could see a sweep of this high still. Yes, we are bullish on structure, but we still have unfilled imbalance up here and that previous area of supply. So we have an area of supply here still on a 4-hour time frame. And we have a previous area of a swing high where we see liquidity being taken. So this is a point in time when we see this breakout, our last close down is here. That makes this our new strong low in the market. Let me just change that. So our new strong low as we see the breakout. Now don't get confused that we're looking to buy because we're still bearish inside our daily swing. Let's continue forward. So now we've created a nice high, couple highs here to be swept. I'm also looking for this high to be swept. That's what I'd like to see. Now, when we saw this candle closing down, that's what creates this is a valid high. So this becomes your weak high. So what we've actually just seen is a sweep of a weak high. So this could now run down for this strong low from this point. I would prefer to see a sweep of this high, but this is an internal sweep. Let's just see if the market can push higher. No, we don't. We go from this high. So because that high got swept, very often you can see a solid reversal from there. So now what we have is a new break of structure, bearish. Now, hopefully this is all becoming clear. How we read the structure. Now, obviously you can see the speed and the automation went through the first part of this video. This is the manual way of doing it yourself. Now, when we see this breakout, this becomes our new high. So now we class this as our strong high. Let me just do that again. So we have a strong high as we break to downside. We haven't had a valid pullback. Let's just see if we get a pullback. So we continue down. There's our valid pullback. This now becomes your new weak low in the market. Change this back to a weak low. If we don't have a week low, we can't see where we are. Again, we have a new area of supply, so we can grab this. This becomes our new area of 4-hour supply with this as our current strong high in the market. So if you are getting some great value from this today, the second half of the video, going through step by step, reading the structures, do drop me a comment, let me know that this is becoming to give you that aha moment and you're seeing how it works. Now, all of this is taught in much more depth inside that 90-day fix, but the companion tool that you saw at the beginning half of this video will show you how it works and automates it for you very fast. So let's just see if we pull back towards that supply or we drop. So we get a sweep here. So you got some high here in the market and these highs. We get a nice sweep. That often is going to show you the market's going to push lower. So we'll mark it out as a 4-hour sweep. Before we wrap up, if you're still second guessing trades or staring at the chart, not knowing what the next swing means, that's exactly why I built the 90-day program. It takes structure and makes it step by step so you know exactly what to do instead of guessing. Traders like Danny came in after losing nearly $300,000. He didn't just learn structure, he finally knew how to trust it and rebuild his trading. If that sounds like where you want to be, the link to apply is in the description. Seats are limited, so check if one's open for you. Now, personally, let's have a look, see where we are. Okay, so we are inside that area. So yeah, this is understanding a discount and premium area. We did sweep, so we could see a run now for that week low. He's swept inside an area of premium. And the market does run down. And then we hit that final target of the daily low. Now, understanding what happened here is we made a sweep above, taking liquidity, and we ran into this area. Now, this is actually an entry model we go through understanding in the 90-day. But this is where the imbalance was above. We swept these highs, took the liquidity into the imbalance, nice reversal outside the candle. We're inside our area of premium entry and we target for the week low. So again, a new break structure and we continue down. So that is how you've seen now the way the indicator will automate this for you, a nice fast fix. And you've seen now how you can manually do it yourself as well. So hopefully, whichever way you decide to do this, you've got an opportunity now to go and start mastering shifts in the market and reading price the right way. Now, if you want to see this tool in more action, do check out this next video popping up. It's going to show you how it works across multiple timeframes.